Hello everybody, it's Mike here again. Today we're going to be talking about the common fears of investing. And again, the information here is sourced from the book The Truth About Money by Rick Edelman. So getting started, the first fear is the stock market is risky, right? Everyone says it's risky. Well, let's take a look at that. Well, stocks are much safer than you think. So the S&P 500 actually made money 86% of the time in 5 year intervals, 95% of the time in 10-year intervals, and 100% of the time in 15-year intervals. Think about it then. Think about the long term, guys. So the question is, when to invest? Which stock to invest in? No, don't think about that. Think about how long you're going to invest, okay? Because when you take time, you can convert something as risky and uncertain, like stocks, into something safe and predictable, right? Look at the numbers again. Look at the 15-year intervals, right? 100% chance to get money is insane, right? So fear number two, people think that world events are going to destroy your investments. Well, let's take a look at that. Well, the reason why it affects people is because it affects our mindsets, right? When you focus on today's headlines and stuff like that, that's not good advice, right, for investment choices. And crises make us have pessimistic attitudes and discourage us from investing, right? When you hear, this and that is happening across the world, you automatically think, it's not a good time, it's going to crash or something. But actually, these times are arguably the best times to invest according to historical data. The stock market went up 76% of the time from 1940 to 2010. And during this time, tons of disasters and problems throughout the world happened, okay? Tons. So the third fear is market timing, right? So people think, you have to buy and sell at the perfect time because on paper, theoretically, right, if you enter on the lowest possible and sell at the highest possible, you're going to get the best results, right? Well, the thing is, you have to be able to consistently time the market over a meaningful time. Like, that's almost impossible, okay? I say almost because some people may be able to do it, but in reality, the average person is not going to be able to do that, okay? Market timing requires that you get in and get out, right? Entry and exit. You have to be perfect with those or very good with those. And just think about it like this, okay? Someone who just holds, right, buys and holds, they will experience all of the gains and all of the losses. But someone who times the market is going to experience some of the gains and some of the losses, right? And the thing is, we know that the market has an upward bias. So it's much easier, right, to just experience all of the gains and just experience all the losses. That's just putting into perspective there. So the fourth fear is market volatility. Well, what is this? Well, like volatility is when the price can fluctuate right from its actual value. So people always think, but what if it falls, right? Stock prices are volatile, right? That's just in its nature. And the fear of prices makes us forget that they rise much more than they fall. You got to think about stocks like tides and waves because many people focus on the big waves, right? The big waves. But just like tides and waves, tides are predictable and are never affected by waves, no matter how big that wave is, right? So focus on the long term. Who cares about what happens in the short term? This and that happened. That's not going to affect the long term. Focus on long-term investing. So recapping everything that we learned. The stock market is safer than you think, right? Prices rise more than they fall. World events don't ruin your investments. There are arguably better times to invest actually during these, bad times. Third is that you don't need to perfectly time the market because you would have to time both the entry and the exit, which is extremely difficult, and you miss out on potential gains. Remember, if you just buy and hold, you'll get all of the gains and all of the losses, while if you time it, you're just going to get some of the gains and some of the losses. And that market volatility is natural, okay? Just focus on long-term investing and you wouldn't have to worry about it. So that's it for the video. Thank you guys for watching. Like, subscribe, do what you will. You guys are not obligated to do so, and I'll see you guys in the next one. Peace.